So today, we're going to talk about some of the most powerful, best-positioned companies on the planet. And look, we're not talking about your average everyday stocks here. These are true compounding machines with absolutely enormous competitive advantages. So let's break down the thesis behind these companies that seem, well, almost indestructible.
Now that is a huge statement, right? Virtually indestructible. But it perfectly captures the idea we're digging into today. We're talking about companies that in many cases don't even have what you'd call real competition. They're just playing in a totally different league. So you gotta ask, what's the secret sauce here?
Well, it all boils down to this one simple, powerful idea, a wide moat. And it's just like it sounds. Think of a medieval castle with a giant moat around it to keep attackers out. These companies have built structural advantages that do the exact same thing. They protect them from the competition, letting them just sit back and compound value year after year. And we're going to break down three really distinct types of these moats, starting with one that's, believe it or not, built on pure physics.
First up, we have moats that are literally built on the laws of physics. These are companies whose products are so technologically complex, so ridiculously, mind-bogglingly difficult to engineer, that trying to copy them is, well, it's pretty much impossible. Okay, let's take ASML. This is the perfect example. This company has a complete and total monopoly on a critical piece of the semiconductor puzzle. You see, when it comes to the crazy advanced machines that make our most powerful computer chips, there's no second or third place. There's no silver or bronze. It's just ASML, all alone on that podium. And wow, you can see the market is finally starting to get this. Look at this. Analysts just doubled their price target, a street high of $1,500. Why? Because of its insane pricing power. It just goes to show, when you're the only game in town, you call the shots.
All right, next up, another giant with a moat built on physics, GE Aerospace. And this isn't just some boring factory making plane parts. No, the whole idea here is that it's basically a royalty on global GDP. It's incredible, all thanks to its business model. Okay, so here's how it works, and this is the really clever part. GE sells these incredibly complicated jet engines, but the real magic happens after the sale. You see, government rules actually require that any new parts have to come directly from GE, no exceptions. This creates this locked-in, super high-margin monopoly on service and parts that last for decades. Think about it, the barriers to entry are just so impossibly high that no one's even tried to compete in 50 years. 50 years! And staying on this whole theme of just mind-bending complexity, let's talk about two more absolute titans of the semiconductor world, Taiwan Semi, or TSM, and Synopsys. Their moats are also built on the almost unimaginable physics involved in creating modern computer chips.
You know, for the longest time, people thought of TSM as just another hardware company that goes through booms and busts. But that view is, well, it's completely wrong now. The reality today is that TSM has basically become a global utility. It's a monopoly on raw computing power. Sure, people talk about Intel or Samsung, but here's the bottom line. They just can't make the most advanced chips. And that gives TSM absolute pricing power where it matters most. Okay, let's shift gears. We're going to look at a totally different kind of moat now. This one isn't about physics. It's about controlling the very language of trust in our financial system. These companies are the essential gatekeepers. They own the toll booths on the global highway of capital. This really breaks it down perfectly. So, imagine a huge company or even a government needs to raise money. They issue bonds, right? Well, here's the catch. They have to get that debt rated by either S&P Global or Moody's. It is not optional. If they don't, investors won't trust it and they'll have to pay way more in interest. It's this beautiful duopoly where their customers are basically forced to line up and pay the toll. There's no other road to take.
And this is where it gets really interesting for the future. Analysts are seeing this massive wave of debt coming in 2026. All these companies that put off refinancing are now hitting a wall, and they have to come back to the market. And guess what? Every single one of them is going to have to drive right up to that S&P and Moody's toll booth and pay up.
All right, for our last category, we're talking about moats built on something simple but incredibly powerful, pure, unmatched scale. For these companies, their massive size creates this self-reinforcing loop, this fortress that just gets stronger and stronger.
Just look at the payment duopoly, Visa and Mastercard. It's that classic chicken and egg problem, right? Billions of us use their cards because every store takes them, and every store takes them because, well, billions of us use their cards. They have slightly different game plans. You know, Visa is all about having the biggest network, the rails, while Mastercard is more about adding layers of trust and services on top. But at the end of the day, both are just powered by this unstoppable scale.
And then you've got Amazon, which is using its insane scale for something totally new, AI.
Their new AI shopping assistant, Rufus, is, honestly, it's a game changer. Get this, the data shows that when a customer uses it, they are 60% more likely to actually buy something. 60%. That's a huge lift in conversion. And that projected $56 billion boost to sales, that number is bigger than the total yearly revenue for most other retailers out there. That's something only a company with Amazon's scale could even dream of pulling off.
And of course, we have to talk about Netflix. The whole idea behind Netflix's moat is this concept called escape velocity. Its subscriber base is just so enormous now that it's created a fundamental economic advantage that nobody can touch. It's like a flywheel that's just spinning faster and faster. The bigger it gets, the harder it is for anyone else to even think about catching up.
Okay, this chart really shows you exactly what I mean. It's all about the unit economics. Let's say Netflix and a smaller competitor both spend $1 billion on new shows. Netflix gets to spread that cost over its, 300 million subscribers? So for them, it's just about $3 a person. But for the competitor, with way fewer subs, that same $1 billion costs them over $12 per person. You see the difference? This lets Netflix offer so much more value, which gets them more subscribers, which makes their economics even better. It's a beautiful, virtuous cycle.
So, we've looked at all these incredible companies. What's the big takeaway here? What should you remember? It really comes down to learning how to spot the underlying structure, the secret ingredient that makes a company so dominant and so built to last.
So today, we've really broken it down into 3 big patterns, right? First, you've got the moats built on physics and pure complexity. Stuff so hard to engineer that it's almost impossible to copy, like ASML and GE. Then you have the essential gatekeepers, the companies that own the mandatory toll booth in a critical industry, like S&P and Moody's. And finally, you've got the moats of just unmatched scale, using those network effects to create economic advantages that rivals just can't touch. Think Visa, Amazon, and Netflix.
And that really leaves us with one big question to chew on. You know, in a world that's changing faster than ever, with all this disruption, which of these moats, the one built on physics, the one built on being a gatekeeper, or the one built on sheer scale, which one do you think will prove to be truly indestructible in the long run?